Inflation, the persistent increase in the general price level of goods and services, has been a topic of concern and debate among economists, policymakers, and the general public for decades. It's a phenomenon that affects the purchasing power of money and has far-reaching implications for individuals, businesses, and the overall economy. This video aims to explore the question, should we worry about inflation? By delving into the causes and consequences of inflation, we can better understand the nuances of this economic phenomenon and its relevance in today's world. Understanding inflation. Inflation occurs when the supply of money in an economy grows faster than the supply of goods and services. This excess money chases a relatively fixed amount of goods, causing prices to rise. Inflation can be driven by various factors, including demand-pull inflation, cost-push inflation, and built-in inflation. While moderate inflation is considered a normal feature of a healthy economy, excessive or hyperinflation can be destructive and cause significant economic disruptions. The causes of inflation. Demand-pull inflation. This type of inflation occurs when there is an increase in aggregate demand for goods and services that outpaces the economy's ability to produce them. Factors such as increased consumer spending, government expenditure, or investment can lead to demand-pull inflation. Cost-push inflation. Cost-push inflation results from rising production costs, often caused by factors like increases in wages, energy prices, or the cost of raw materials. When businesses pass these increased costs onto consumers in the form of higher prices, inflation ensues. Built-in inflation, also known as wage price inflation. Built-in inflation occurs when workers demand higher wages to keep up with rising prices, and businesses subsequently raise prices to cover the increased labor costs. This cycle can perpetuate inflationary pressures. The consequences of inflation. Eroding purchasing power. One of the most immediate effects of inflation is the erosion of purchasing power. As prices rise, the same amount of money can buy fewer goods and services, negatively impacting the standard of living for individuals and households. Uncertainty and planning challenges. High or unpredictable inflation rates can make it difficult for businesses and individuals to plan for the future. It introduces uncertainty into financial decision-making and can hinder long-term investments. Income redistribution. Inflation can lead to income redistribution, as those with fixed incomes or limited resources suffer the most. This can exacerbate income inequality if not addressed through progressive policies. Central bank response. Central banks often respond to inflation by raising interest rates to curb spending and cool down the economy. This can lead to slower economic growth and potential job losses. International competitiveness. Persistent inflation can erode a country's competitiveness in the global market if its currency depreciates relative to others. This can harm exports and affect trade balances. Should we worry about inflation? The question of whether we should worry about inflation depends on its magnitude and the context in which it occurs. Some degree of inflation is a natural consequence of a growing economy, and central banks often target a moderate inflation rate to maintain price stability. In such cases, inflation can be seen as a sign of a healthy economy, reflecting increased demand and economic activity. However, higher inflation rates, particularly when they become excessive, can be cause for concern. Hyperinflation, as seen in countries like Zimbabwe and Venezuela, can lead to economic collapse, social unrest, and a breakdown of trust in the financial system. Even in less extreme cases, inflation erodes the purchasing power of money and can harm the most vulnerable segments of society. In conclusion, whether or not we should worry about inflation depends on its level and the overall economic context. While moderate inflation is generally manageable and even beneficial, high or hyperinflation poses significant risks to individuals and economies. It is essential for policymakers and central banks to strike a balance, carefully monitoring inflation rates and taking appropriate measures to ensure price stability and economic well-being. In sum, while inflation should not always be a cause for alarm, vigilance and prudent management are crucial to safeguarding economic prosperity. Subscribe now and never miss a beat in the world of economics.